explain the characteristic and role of small and medium enterprises or SMEs in Malaysia. SMEs are very important because they make up the majority of businesses in our country and help drive the economy. Let's look at what makes SMEs unique and why they matter so much. Small and medium enterprises or SMEs in Malaysia are defined based on two main criteria: the annual sales turnover or the number of full-time employees. The threshold differ according to each sectors. The first sector is manufacturing sector. Micro enterprises have sales turnover of less than RM300,000 or fewer than 5 full-time employees, while small enterprises have sales turnover from RM300,000 to less than RM15 million or between 5 to fewer than 75 employees. But the last one, medium enterprises have sales turnover from RM50 million to not exceeding RM50 million or from 75 to not exceeding 200 employees. For the second sector is services and other sectors. Micro enterprises have sales turnover of less than RM300,000 or fewer than 5 full-time employees. For the small enterprises have sales turnover from RM300,000 to less than RM3 million or between 5 to fewer than 30 employees. But the last one, medium enterprises have sales turnover from RM3 million to not exceeding RM20 million or from 30 to not exceeding 75 employees. Let's look at sector classification of SMEs in Malaysia. First is manufacturing, which includes businesses that physically and chemically transform materials or components into new products. Second is services, covering industries like distributed trade, information and communication technology or ICT, professional services, private educational institutions and health institutions. The final group is others, which refers to key economic activities such as primary agriculture, construction and mining and quarry. An important point to note is if a business meets only one criterion across different sizes, the smaller size will apply. For example, if a company's sales turnover qualifies as small but its employment qualifies as medium, the business will be classified as small. So besides this definition, SMEs in Malaysia share other key characteristics. So many SMEs are family-owned or individually managed, which means decision-making is often quick and personalized. They usually have limited access to large-scale capital and advanced technology compared to big corporations. SMEs are also known for their high flexibility and adaptability in operations, which means they can respond quickly to market changes. And the last one is, most SMEs have a local focus, often concentrating on regional or niche markets rather than competing at a national or global level.
SMEs play a vital part in Malaysia's economic landscape and are break this down into 4 key roles. Firstly, their economic contribution. SMEs make up a massive 97.4% of business establishment in Malaysia. In 2022, they contributed 38% to the country's GDP, provided 48% total employment, and made up 17% of total exports. These numbers highlight how essential SMEs are, not only in driving the economy, but also in helping Malaysia recover from crises like COVID-19 pandemic. Moreover, SMEs are Malaysia's largest job providers. They absorb workers across sectors such as services, manufacturing, agriculture, and more. This significantly cuts to reduce unemployment and ensure sustainable economic development throughout the nation. Second, SMEs drive innovation and entrepreneurship. They are often seen as testing grounds for new business models and ideas, especially in big growth areas like technology, fintech, and halal products. With support from government initiatives and continuous learning, SMEs contribute in building more creative and competitive economy. Third, their role in supporting supply chains and large industries. SMEs often act as suppliers or subcontractors to large companies, especially in manufacturing and services. This means they help provide the materials or services needed to keep larger industries running smoothly. Through collaboration in networks and virtual R&D, they help produce better and faster product outcomes, making the whole industry more efficient. Lastly, SMEs play a key part in rural and community development. A large number of SMEs operate in rural regions, promoting local resources and tourism. By operating outside of major cities, SMEs help balance economic development and reduce the gap between urban and rural areas. Initiatives under ministries like KUSKO are focused on empowering rural and Bumiputra entrepreneurs, ensuring that national development is more balanced and inclusive. In conclusion, SMEs are not just the backbone, they are the heartbeat of Malaysia's economy.
Next, we will explain reason of obstacle faced by SME in securing bank credit. Here are the 3 reasons.
Collateral is something valuable that is business give to the bank as a guarantee. If the business cannot pay back to the loan, the bank can take the collateral to recover its money. But many SMEs does not strong asset like land, building, equipment or savings. Without this, bank feel insecure and may reject the loan application. Limited credit history is another big issue. Many SMEs are still new or have never taken a loan before. They have no record to show that the business can pay back loans on time. Without this history, bank cannot evaluate the business, its responsibility and risky. The first point is lack of security for the bank. When a business applies for a loan, the bank usually asks for collateral. This means something valuable like property or machinery that can be taken if the loan is not repaid. But many SMEs does not enough collateral. Because of this, the bank feels insecure and may reject the loan application. Next is higher possessive risk. If the SMEs has limit or not credit history, the bank cannot check if the business is good at repaying loans. This increases the bank uncertainty and makes the business seem risk. The last point is eligibility for the standard loan terms. Even if the bank agrees to give the loan, the terms are usually not good. The SMEs may face high interest rate, a short repayment period, or a small loan amount. These conditions are hard for SMEs to manage and can cause more financial stress. First, SMEs usually small and newly established. Many of them have never taken a loan before or have only done small transactions. Because of this, banks are unable to assess whether the business is capable of repaying the loan, which increases the risk for the bank. Second, SMEs often have limited financial records and weak documentation. Without proper financial statement or records, banks find it difficult to evaluate the company's financial strength and determine if they are credible. Third, many SMEs lack access to formal financial service. They do not use credit cards, loans, or even the proper business bank account. This means they do not put a credit history, making it hard for banks to trust them with financing. First,
poor financial management and documentation. Why it makes bank credit hard to get for SME? What is poor financial management and documentation? Poor financial management and documentation means a business lacks proper system and record to track and report its financial activities. This includes not keeping accurate accounting record, failing to prepare key financial statements like income statement or balance sheet, no budgeting, and no auditing or verification of financial documentation. Why does this cause difficult? First, it causes a lack of financial transparency. Without clear record, banks can see how much the business spend or off, making it hard to judge if the business is financially stable. Second, there are an inability to prove creditworthiness. Banks need solid data to assess if a loan can be prepared without proper documentation. SME can't prove steady income or sufficient asset. Third, it increases the pessimistic. Lenders see business without proper financial management as disorganized and risky, and are less likely to offer credit. How does this block SME from getting bank credit? Number 1, loan application get denied. Without accurate and variable record, SME fail to meet the bank basic requirement. Number 2, its credit approved, the SME might have higher interest rate or strict terms because of the higher passive rate. Number 3, bank may only offer small loan amounts because they can't confidently assess how much the SME can handle. In short, poor financial management and documentation create a big barriers for SME. To access bank credit, SME must have proper record, clear financial statement, and sound financial practice.
Stringent lending criteria means strict conditions set by bank before approving loan. The goal is to reduce the risk of default by making it harder to certain group, especially small business or SME, to access credit. Big bank usually require the high credit score, a lot of document, and proof of consistent profit. Many SME, especially startup, cannot meet this condition. Why stringent lending criteria lead to difficulty? First, reduce lending during crisis. During financial crisis, bank cut down lending not because SME don't need loan, but because bank themselves face money shortage. Second, SME lacks strong financial record. Most SME don't have enough financial history or collateral, make it harder to meet strict bank requirements. Third, bank prefer low risk established firm. Bank focus more on past performance than future potential. Even SME with good growth prospect often get rejected if they don't have a proven track record. Obstacle SME face to get bank credit. First, short repayment period. SME usually get shorter loan repayment term than big company. For businesses with seasonal income or long sales cycle, this makes repayment difficult.
Second, collateral requirement. Bank ask for collateral like property or equipment, but many SME, especially startup, lack such asset. Even with a good business idea, they can't get loan. Research from Ghana show lack of collateral is a major reason SME struggle to secure funding. In conclusion, strict lending rules protect banks, but they limit SME access to credit, affecting their growth and survival.
That's all from us. I hope these videos can help improve your understanding about